Hi everybody, this is Phillip Guan, CPA. So welcome to the classes number 6 to how to do tax return. So the training is about 2.5 weeks, the total of 13 classes. So we should be able to finish live before Christmas, which is good. So I'm going to share screen to show you practice number 6. I'm going to invite Victoria is going to read some information to us. Okay, Victoria, would you be able
In
to?
this scenario, you will be practicing the following: Schedule C income and expenses, depreciable assets, estimate tax payment.
Okay, we don't need to read the middle. So now this is the very good thing you want to learn. It's self-employed. Schedule C is self-employed, and it's very common. And you also want to learn depreciation, asset and depreciation, and estimate tax. Because the W-2 employee, you normally withhold tax during your paycheck. But if you're self-employed, you have to pay estimate tax every quarter. Now, Victoria, help me.
Iceberg live alone in Aberdeen, SD. He has been divorced for 15 years and owns a small fishing supply shop, the Tackle Shop. Iceberg is a U.S. citizen and cannot be the qualifying child or dependent of another person. Iceberg provides his SD driver's license. The license number is 1234567 and it was issued on January 1st, 2017. It expires on January 1st, 2025.
Okay, that's very good. So now the health insurance they provided.
Iceberg was covered by healthcare insurance for the entire year. Form 1095A was not provided.
Okay, so in here, so we don't need to read this one. We are going to use this information to practice the tax return. So it looks like, let me see if there are any kid in here. It doesn't see any kid in here. So this taxpayer have been divorced and no kids. So will be filed as a single for tax return purpose. So now we're going to be on the right side. There's a plus sign right here. Hold it. Now, I'm going to get this. Now, those are all make-up number as well as make-up information. Not that I remember, not that I know of, there's a real last name BRG. Now, I am going to use this. As you can see, in my 2022 tax software, I also have this client because the tax software company, trade tax software company create this. So we use their information to do a training. So now I say, okay. Now there's all check mark line in front. And that's what I wanted. I want to carry over all the setting. So I don't need to do a lot of setting. Update. Oh, I think I double check this one for last year when they do a training. Okay, now number one, I can smile. I can kind of like get a little bit small. Now, first of all, choose at this moment is divorced without a kid, is single. Now, this is social. It's very important. Make sure it's right. Okay. Birthday is good. So address. I've been changed to state of California for training state versus, but right now it's 57402. You can copy this. Excuse me, right here. Paste, enter. You go to, I also change it here automatically. Now, somewhere in here, right here, there's also no interest, no foreign account like that. Okay, it's no and no. And then down here, above a little bit in here, they have health insurance. Yes, but they don't provide any 1099 letter A. So there's nothing we can do anything in here. If there is, we're going to fill this one. Like in California, cover California. Okay. In here, the ID, right here. Change the ID. What state is it? It was SD. Excuse me. In here, according to this, they don't owe any tax for federal in California for last year. If this is a new client, you have to look in for their 2022 tax return to see, like 24, what the total tax, and as well as California. So we finished everything required to input in the first tabs. Now, no kit, no other things. Estimate tax, we're gonna go back to here after we do the thing. Well, since we're here, let me see if they say anything in here. Okay. Estimate tax. Oh yeah, you see, so I make 4,350 per quarter paid. Right. You actually can move to here or to here anywhere. It's movable. You have to hold it. You have to point it to the top, the tab, and then drag it to anywhere. Okay, just like normal window. Okay. Now, remember we are doing 2023 tax return. We are using 2023 tax software. Now, for last year, 2023, there is a special rule for some state, like state of California. The estimate tax, even you pay up to November 16 or 2023, can be for all 3 quarters, but not for all states. So only for this like statement like the state of California, because there's a storm and then IRS declare. Now, and the last, I think this example in here, they forget to update this. This is supposed to be 2023. Okay. So this is 2023. The last payment for 2023 is 24. So this is what. So the real meaning of this whole sentence is really mean the right side. They just make a mistake in the 2022. It should be 2023. Okay. So now, let me show you where that goes. You input all this number, it shows up in a tax return 1040. Just say state is not here yet. Page 2, line 26. That's where the total of 2023 estimate tax is that 17,400. 4 times is 4350. Okay, so we take care of this one. And then what if the next year estimate tax? In here, I could let the computer software generate it. I can say, hey, apply the overpayment if there's any to the next year. And then you do whatever you need to do. Okay. Now, let's go back to here. I'm going to invite Victoria to read this whole paragraph as an up to here. Victoria, please.
Iceberg owns and operates the tackle shop, a fishing supply store. His business is located at 855 Tackle Lane, Aberdeen, SD 57402. Iceberg purchased the building. His building. His shop is located in for $250,000 plus land cost of $100,000. He uses the cash method of accounting in his business. In 2022, his gross receipts were $250,000. He did not make any payment in 2022. That would require him to file Form 1099. The business does not have assets to depreciate listed below. For this example, the taxpayer has elected out of all bonus depreciation. ICE received Form 1098 reporting mortgage interest on the tackle shop. He had no interest in or authority over any foreign account and did not use virtual currency.
Thank you. Okay, there's cash math. Okay, cash math of accounting is when you do the business, you still don't count it as a revenue until you receive the payment. For example, like right now, December, like you provide any service, you bill them, but if they have not been sent a payment to you, does not count until you receive the payment. And then the expense is the same thing. Even though you purchase anything, you receive an invoice, even though the supplies may have been on your hand, But if you have not been mailed out a check, it's not an expenses as well. So if you're cash basis taxpayer, so for now, for tax planning purpose, you should make sure very quickly pay all the bill you're supposed to pay so that you can get all tax deduction. Okay. Now, we are going to go back to here. It's in tab number 2. Next to the journal, there's an income. Right now it's green. On the very first left corner, C is in green color as well, I know. Green color tells you this taxpayer in last year, they have big sense. It's more likely they're going to have a similar things. So they show you in green color, that means, hey, double check, please. Okay. So you can move around here, you can do all the things in here. Now, you can scroll down, scroll back a little bit. Sometimes it could, sometimes it won't. Supposed to be good. Okay, it doesn't. Okay. I changed it to state of California, so I change it back to what it's supposed to. This is their home address. Let me see. This is the business address. 57402. Oh, sorry, I make a mistake. Delete it. 57402. Okay. So the store, we already fill out everything is correct. Now, under F, letter F column, accounting math is not cash basis. It is so the software, if you don't check anything in here, it is cash basis. That means you does not need to check anything, do anything in item F, which in this situation is supposed to be unchecked anything in here if there's any. So G is not applying, okay? I'll make sure, look, double negative R is not material. They're really doing businesses. They are material participating. Okay. They make payment, require 1099 in here. They also did fill out the 1099 in here. Hey, there's a penalty if you let's say hire the independent contractor and pay them 600 or more, and you don't pay 1099, there's a penalty. And you cannot deduct it as well. Let me see when they start a business. Now, everything in here is supposed to be 2023. I think they forget to update this. So some information here is still like 2022. They mean 2023. Let's say it this way, okay? Even they say it and write it down in 2022, but they really mean 2023, okay? Now, first thing first, how much their income? there are two number 250K. The receipt, the gross receipt 250K. So they really mean 2023. Okay. Yeah. 250K like here. And then the next thing, those are expenses. Let's put the expenses first. First two are advertising. Because there are two advertising, so you want to double click. You put in each kind of advertising by itself. Okay. Ooh. They do quite a bit of advertising, huh? So the system is going to be add it up for you and then lump it in advertising. So we finish insurance. So the schedule C in the part 2 expenses from line item A all the way to 27, they follow the letter sequence A to E from left to right, from the top to the down. So when you see insurance, it's I, right? Like here, like 15. And then the next one is office expenses. It's O. Right there. Scroll down. You can tap down or you can click either way. Now, as you can see, as your mouse click on that one, they highlight the whole thing. So you double check. You are put in the right places. It's office expenses 5,000. Now, as you can notice, they are even number. Well, for illustration purpose, yes. But for the real client, more likely, they're not all number even. If they do provide you an all even number, more likely, they're not doing a complete bookkeeping. It's just guessing, which is not right. And you're supposed to be do the bookkeeping according to the bookkeeping and get the right numbers. Okay. This is also tricky audit if you can have all the even number, right? So this is not a good thing to do. But for illustration purpose, it's fine right now. Repair or Roger. Yeah, on the 21. 500. Taxes. Now this include all kind of taxes. Sales tax and maybe some property tax. Okay, so that all together as a lump sum, 12K. Now, supplies under line 22 is 2,400. Utility 25. So up to now, we have been input all the number on the left side under expenses. The item that I just highlighted. So the next thing, I'm going to double check later one more time. So I'm going to do the cost of goods sold. The cost of goods sold, you scroll down a little bit to the right. You see line 35. There's all the number there. Okay. Now let me get this. Now, if it is a cost basis inventory, so you purchase the inventory at cost, and then you sell at whatever fair market value. But for the accounting purpose, right now, we use a cost basis. You can also use the lower of cost of market, but you have to be doing adjustment. So in here, we are using cost basis. Therefore, there's nothing need to check on box 33. And nothing need to check in 34 as well. The beginning inventory is 70,000. Also, the end inventory at the even number is showing as you're not doing the really real inventory valuation. You probably just guessed it, which is not good. They purchased only 29,200. The ending inventory, which is line 41. Even though they only purchased less than 30,000, but they are showing a lot more than that because the inventory is less. Now, this is all the normal expenses. There is a mortgage interest for this. So this is the mortgage interest right here. The 1098 right here. 1118. You pay for the mortgage of that shop that you bought it. The mortgage interest is tax deductible. The property tax deductible. The sales tax is tax deductible. Sales tax is already, and then also property tax is already going here. Okay, I just did this. Now, they have purchased a business and a building. So what you're going to do is you need to do a depreciation. Under line 13, there's a blue form 4562. You double click. So in here, they get this right here. Let me highlight it. The thing I just highlighted, they purchased a building, which is his shop, for 250K plus land value of 100K. How much is the real value? 350K. So two of them to add together. So the building is 250K right here. And the land value is in here. The land you cannot depreciate. But how can you figure out these numbers? You can get it from the property tax bill. From there, you get a percentage and you times the purchase prices. And in here, and this houses was purchased. Let me see. In here, in it. Let me see when he bought it. Like here. From here, I can know. I bought it back in 2016. So now we're doing 2023 tax return. There's some depreciation. They already used it before. It's applied depreciation, which is the last number. In the right side, applied depreciation, and the yellow highlighted. So now we need to put in, because it's the commercial, so it's 31.5 years right here. The commercial have two ways to depreciate it. One way is 31.5, the second way is 39 years. For different kind of commercial, apply different. In this scenario, it's 31.5. So we take care of this one. So now we go to asset number 2. Now, you may have a little bit confused and with the very first time to learn depreciation. Don't worry, you will get it. Okay. That's number 2. Okay, display cast. Bought it 2014. At 200K. They have been fully depreciated. Where I can tell? Well, the price depreciation is equal to the costs, which means fully depreciated. You no longer can continue depreciate, but you still need to put it in, because when you sold the business or you sold certain asset, accumulated depreciation had to be recaptured as an ordinary income. So especially when you pick up a new client and you have to continue input all the depreciation, even have it full depreciated like number 2 right now. Okay. They choose 7 year like that. And then the number 3. It's a computer. It just bought last year. They take the bonus depreciation last year. They take all of them. So you no longer can depreciate anymore. Number 4. The printer. 250K. No, 2,500. Excuse me. It's also taken as a bonus depreciation last year. Number 5. Parking and building improvement. This is 15,000. They do a straight line for 15 years. The price depreciation they really mean is 2023, because this is the first year, because when they change this one means really 2023. This also means 2023. Newly asset. Number 6. $25. They say they don't want to get a bonus depreciation. 0. They don't want a bonus depreciation. Number 5. Number 6. Tap in, paste down. They already fully depreciate. Okay. So now, what are you going to look like for these clients? Now, when you hit view, they're going to show you all the numbers. First, I want to check the personal information. It's a single. So, no other no W-2 income, no interest income and dividend income, no stock. You just have a swap. I need to go back to get this number a little bit later. So now, I think the answer in here is saying no. I need to go back to change this one. I just saw it. They don't have 1099 issue. Okay. 250K is the revenue. And then the cost of goods sold from here. 250K, 70K was a start with. 29,200 was purchased. To add together 99,200. But there's only 33K300. So the profit margin is quite high, isn't it? So 65K of the costs is shown at 250K. So it makes the gross profit of 184K. Those are operation expenses. We're going to go back to here later. So these expenses, do you remember we input that in? Now, this depreciation, I want to show you depreciation schedule, how to get all these numbers. There are a total of the seven ones I add on. Let me make sure I get the 7 not showing up as the I put override current depreciation 0 in there. Okay. So it's not going to show the current depreciation. Now at this moment, the depreciation schedule looks like this. The first one is the shop that actually have a depreciation almost 8,000. Now, and then this one have been fully depreciated, the second one. The third one have been fully depreciated. The fourth one, you just bought it newly. You decided to use 5 years. So you get this. So, and then the building 15K divided by 15. So you're supposed to get 1,000, but the system, when you do like this, and for the first year, there's always less than the full year. You get this, it's very little. So now the last one, which is the number 6, 3,000, we already fully depreciated. So therefore, the depreciation is nothing. So therefore, all the depreciation for this year, there's only 8,000. So now at this situation, this depreciation, when you add all together, is the total expenses in line 28 is less than 40K, right? So you get 145K income. So now this income is going to subject to income tax as well as self-employment tax. So now in here, the income tax by itself is 16K. The self-employment tax is 20K. So therefore, it's 37K in total. You only pay 17K, so you still owe this much, about almost 20K. Now, my question to you is there any legal way you can lower the tax? Anyone knows? The answer is yes, there is. Look at this. Go back to depreciation. The first one, there's nothing you can change it because it's the building. The over 31.5 is a continuation. The second one, or the full depreciation, that nothing changes. This computer already also fully depreciated. Nothing you can change it. And this one is the current year. I could take a bonus depreciation. Number 5, do the same thing. Watch this. I get rid of this override and let the system allow any bonus depreciation. Number 6, then nothing changes because it's the old one, right? Okay, so now watch this. You remember the total depreciation was 8,000 something, right? Now, after we make these choices, we allow the bonus depreciation. Bonus depreciation, now first, it was 8,000 something, right? Right now, 22,000. Income less. And now is the total tax. It was about 20K you need to pay, right? Now it's 15K and 900. So there's a tax saving there. Let's look at the detail. What happened is under the bonus depreciation, they allow you to take this much as a bonus depreciation. Do you remember the original was $500 only for this one? This one was also $500. But right now, all of a sudden, they can do it like this. That's pretty cool. Now, what if they also bought a car, a truck, and it's over 6,000 pounds, and use 80% for the business, and cost is 40K. So what you're going to do is you do 5 year, you get rid of this override. Now, the depreciation is more. Actually, let me see. Something's wrong in here. Oh, I put it in the year. Let's say I just bought it this year. Bought it in 2023. Now, your depreciation all of a sudden 49,000. Why? Because the truck using for the business, 80% using for business, and it's over 6,000 pounds. All of them depreciate in the current year as a bonus depreciation. So, what is going to end result for tax purpose? Do you see it? The income tax is trying. So, for you to take a bonus depreciation is deferring the tax in the future when you sold the business. And then the cumulative depreciation, they cap it. But by doing this way, during the time you build your business, you are getting tax deduction. So you're helping you to build a business. Okay, so anyone have any question regarding about today's classes?
So the depreciation that you talked about is for the business appreciation, and is the items related to the business, like all this here, right?
Correct.
So it's not including your real estate depreciation or other depreciation.
No, because the real estate depreciation in this situation, they own a shop, they own a building. The underlying one there is already. You see it later.
Oh,
They bought a building to run a business. They did not rent somebody's a store. They bought it and then they do it over 51 and 5 years. Okay, so then the rest of the things is the asset. So that's why for the planning purpose, let's say if you're running a business, you need any computer or anything or equipment or car for business use it, you should decide it to buy. You can get a loan to buy it or credit card to pay for it. you can still get fully deductible in the year of 2023 tax return. You can pay over the time, but the full amount could depreciate it. Good. Am I answer your question? Okay. Any other people have any other questions? This
Oh,
is
I'm sorry. I'm sorry. For the tackle shop on the most right-hand side, the rate 3.175. Is it like a standard rate?
yeah. The law for the business rental, for the business commercial is basically this is a commercial. Okay, is either 31.5% per year or 39 year. The different commercial is 31.5 and certain other is 39. But in this one is 31.5.
So 31.5 equivalent to 3.175. Why is that a rate saying
No, listen,
3.175? What's the rate? Huh?
They are $250,000. The total is $250,000.
Yeah.
So divide by 31.5.
Okay.
You're gonna get this about 8,000.
So what is the rate means?
Okay. Do not worry about the rate yet. This one the computer gave you that how actually can generate this number. But you really if you really want to do a calculation, you use 250K divided by 31.5.
Okay.
So this is now if you put that, like for example, in this one, you will get these numbers. Okay, but it's in the first year, sometimes may not necessarily get exactly that number the first year. Okay, so now for any one of you, include myself, the first time to learn depreciation is all confused. If you are not confused, you're super smart. I was confused when I first time I learned depreciation. But what you're supposed to do is, this is class number 6, and I'm gonna upload in YouTube. So you are
for the life, right? You said 31.5. So there are some items saying 5 years, 5 years, or 15 years. Does this items generate by the software, or do you input this number?
Were you sleeping when I'm training?
Yeah, I was. Yeah, because you rolled the screen
It's like here. It's like here.
times.
It's like here.
So you input it, right?
I input it according to the law.
Okay.
So, for example, if someone like us to go to study accounting, and we have talk, or if you go to take a tax preparer classes, they will talk to you, and what kind of the asset is subject to this that many years, and IRS list it for you. So you those that you have to input it. But here's a cool thing. If something you don't know it, ask. And then in a normal tax practice, normally 80% or more situation will be same as last year or similar as last year. Sorry, you just ask the rest of the things that you don't know. But I encourage each and every one of you to take the tax prepare classes, because you will have an opportunity to go to detail to learn. Now, there's a shortcut for you to learn from me. Open to computer, one with your software, just for this class number 6 regarding about this portion of depreciation, and you do it simultaneously about 5 to 6 times. You're to the point you're going to tell yourself, I close my eye and can do it. Yeah, you got it. And that's and they're all similar. So once you get it, get a hold of it, you know it, and say, oh, it's not difficult. The input is not that many. See, there's not a lot of input. That's it. Look, It's not a lot of input. It's just a matter of because you never learn about that before. You never do about that before. So that's why you are a little bit confused. It's normal. Okay. So do the homework and go watch my video and practice. You'll get it. Okay. So I'm going to stop the Zoom meeting first, recording first.
Hey, can I, yeah, stop it.
Oh, hold on. Okay, let me stop it.